In this video, I'm going to show you exactly how I use the poor man's covered call to generate real cash flow on the table. We're talking about Bristol Myers and how we use the poor man's covered call, buying a Leaps call option, writing a covered call, and generating real income as if we own the shares. We use less money but generated the same amount of money as if we own the shares. Stick around. I know you're going to like this one. Hey, welcome back everyone. It is time for another red hot covered call video. Well, hey, look, I am absolutely fired up. We're behind the mic talking about the poor man's covered call. Today I'm going to share with you my Bristol Myers trade for which it went perfectly. We're going to talk about that trade, the setup of that trade, and how it turned out. Now, the setup of the trade is the most important part of a poor man's covered call trade. So today, you're absolutely going to learn something from me. Okay? But before we get going, I absolutely need you to write this down. So get yourself a piece of paper. We need to have the reminder. After this video, go to my website, cpt-dashboard.com, click free spreadsheets. Download the poor man's covered call spreadsheet. Now, if you're going to use the poor man's covered call like I do, where we buy the Leaps call option in lieu of the shares, we're going to buy a Leaps call option to act as shares. We're then going to write near-term covered calls, generating real near-term covered call income as if we own the shares, using less money up front. Well, you're going to need a poor man's covered call tracker to manage all of those trades. I'll tell you what, I have poor man covered call trackers for about 5 or 6 positions right now. I've already eclipsed the 10 trade mark. Yes, we use this Leaps call option 10 times, generating income every single month. Look, the poor man's covered call is an opportunity to use less money up front, and we can still generate cash flow, near-term cash flow that mimics as if we own the shares. Now, I'm going to explain that a little bit more here, but let's get to it. If you've never been to my channel and you like what you hear, subscribe to the channel. It's free. I come back every week, give you timely and relevant covered call trades, trying to up your game. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. And what we're doing is this. I'm going to show you that Bristol Myers trade for which we used a great poor man's covered call setup. Actually, it's probably the best poor man's covered call setup we could have asked for, as the stock took an absolute dump on some bad news. But we knew it would come back, right? That's what these great pharmaceutical stocks do. They weather the near-term bad news, and ultimately, because they have mature businesses, big dividends, and products that are sold around the world, Wall Street always comes back to them. And in this case, that's exactly what they did, as Bristol Myers right now is trading above $72 right now. When I sent this email to the members, the stock was trading for $67, $65 on a day for which it was getting slammed in the ribs. We took advantage of that. I'm going to show you how I did that in this video. Also going to show you how the trade played out and how much money we profited. So I want you to stick around. Okay, so reminder number 1. After the video, you're going to go to the website cpt-dashboard.com, click free spreadsheets, download your free poor man's covered call tracker. I don't spam you, no ads, just download it and use it. Watch the how to use video. Okay, this is very important. I'm going to show you my poor man's covered call tracker for this trade. So you're going to get a little flavor here as to how I use it. And as you can see, I sent the members a seeing the world through my eyes as this trade started to play out. I wanted to send them the trade and let them see the world through my eyes and let them decide if it was a trade they'd want to take on. Let's go ahead and talk about the trade setup, because that is the most important part to a poor man's covered call trade. So for many of you that do not know what a poor man's covered call trade is, I'll be super brief. Instead of buying the shares, right? If I was going to buy 100 shares, I'd have to pony up $6,765, right? Well, when we use the poor man's covered call, we're going to buy a Leaps call option in lieu of the shares. Now, we're going to buy that deep in the money, very important, that 95 to 96 delta leap, because we want to make sure the time value of the Leaps option is so minimal Our very first trade is profitable. Now, if I just lost you right there, don't worry about it. I'm going to talk to you about this trade in this video. You're going to get a little more comfortable with it. And as you get your education with the poor man's covered call, it's going to become very clear. On August 29th, I let the members know this trade was on my radar. And I absolutely love using great S&P type companies like Bristol Myers because they have great products, right? They have fat dividends, and Wall Street always comes back to them even if they get some near-term bad news. And look, all the pharmaceutical companies get near-term bad news as the FDA will not approve some of their drugs. But that doesn't mean they're going back to the drawing board. No, they're just going to update what they have to do, and then eventually they have success. And companies like Bristol Myers and Merck and Pfizer are great for this because they've been around a while and they know how to play the game. Bristol Myers being one of them, I've used them multiple times for a poor man's covered call, and I love using it when they get slammed with that near-term bad news. Okay? Near-term bad news is an opportunity for success. It's not half cup empty. We're going to look at it as half cup full. Oh, and if you've never been to my channel, this is what we are. We are a channel for which it's half cup full, looking for opportunities, putting cash flow on the table. Okay? I'm not a negative Nelly here. I always look for the silver lining in any trade situation. Now, back then I told the members, look, we need to make sure the time value in this option is so minimal that our very first trade is profitable. Now, I've already made the decision I'm going to buy this Leaps Call option with Bristol Myers. I just need to make sure I pick the right strike price with the least amount of time value. Let me show you the chart just so you get a feel for where we were on that day. Now, as you can see, Bristol Myers is trading for about 75 bucks. When I sent that email, it was trading for 67.65. Even if you did not want to do the poor man's covered call or write a regular traditional covered call on your shares, right now you'd be up some 7 points. On a stock like Bristol Myers, are you kidding me? This thing moves sideways to higher. It does not jump off the chart. But on this particular day, of course, the markets are getting tanked. This has nothing to do with Bristol Myers. It is the markets, right? They're selling off. We're starting to hit support lines in the Dow, the S&P, the NASDAQ. Well, on August 29th, we get some nasty news, and it does not help. Bristol Myers finds itself trading at 67.65, and I think it's down some 11% on that day. Well, this is where I want to take action. If I'm interested in using Bristol Myers for a poor man's covered call, this is when I want to buy that Leaps Call option. Why? The stock is getting hammered 11%. 11% on a big stock like Bristol Myers is huge. It's like 30% on Facebook right now. For Bristol Myers to be falling 11%, that is a huge opportunity. So with this moment, I have to decide if I want to use a poor man's cover call right here. We now need to go to the poor man's cover call setup to see what strike we buy and what kind of near-term cover call returns we can generate. Let's go to my poor man's cover call setup for this trade back on August 29th. So here we are. August 29th, I dial up a Bristol Myers deep in the money strike. You see it there. It's a $40 deep in the money strike. I'm going to pay $27.45 for this trade, okay? $27.45. I then have the right, but not the obligation, to take somebody's shares at 40. So what's the cost of that, right? We know that the stock's trading for 67.65. What is the cost of me having the right, but not the obligation, to take somebody's shares at 40 when you plug all the numbers into your poor man's covered call initial trade setup? What you see is right here. See in the middle of the screen? You see that the time value portion of this trade, if I pay $27.45 for the right to take somebody's shares at 40, I am paying 38 cents for that right. Literally 38 cents for the right to take somebody's shares at 40. So now the question is, can I write a near-term covered call and generate 38 cents to pay for the cost of the trade and then generate the kind of 3% 30-day covered call income I like to generate. Well, as you can see, when I placed this trade, I dialed up the 69 strike, and we were going to pick up $2.38. That was going to be a 32-day covered call. And look at the profit, the cash-on-cash profit. If my shares are taken, now, I don't own shares. We're going to talk about this here in a minute, but I'm just going to use that lingo for those that write covered calls and they understand this. If my shares are taken, I'm going to generate on cash invested. Remember, I'm going to buy one Leaps call option. It's going to cost me $27.45 per share. That equals $2,745 invested for the right to buy somebody's shares at 40. That gives me the leverage or the ability to write a near-term covered call, right? I have the ability to write a near-term covered call as if I own the shares. Remember, the Leaps call option acts as shares. This is going to be the biggest hurdle for most of you that don't understand the poor man's covered call. We did not buy the shares. We did not invest $6,767. We invested $2,745 for the right to take somebody's shares, 100 shares. Now we're going to go ahead and write a near-term covered call as if we owned 100 shares. This is where we collect the 13.42% cash-on-cash gain for 30 days if our shares are taken away. Now, if our shares are not taken away, meaning the stock does not finish above our strike price, that's fine. We keep the Leaps call option. We collect cash-on-cash $237 in our pocket, or for a 32-day trade, 8.5% on cash invested. Okay, so that's the trade setup, and I used the 40 strike because I was only paying a mere 0.56% to leverage my money to take on this trade. Now let's go to the charts and see how this played out. Now, this would be a great opportunity. If you like this video, bang that like button. It truly lets me know you like what I'm doing. And to be honest with you, I don't look at views anymore. I get about 700, 800, 900 views every video, but it's the likes. I love the likes. Why? Because that lets me know you like what I'm doing. Okay? Anybody can click on a video and watch it and it gets registered as a YouTube view. I love the likes. So do me a favor, bang that like button right now. So we know the setup already. The stock takes this huge dump, and now I jump into action. I buy that Leaps call option. I buy the 40 strike. Now, I don't know if you noticed the date. I believe I picked the mid-year, June or July Leaps call option. So I have until June or July of next year to take action on that Leaps call option. I either buy somebody's shares at 40 or I sell the Leaps call option. Okay, so I don't actually have to buy anybody's shares at 40. But again, we're using this in lieu of shares. Let's see how this trade begins to play out. As I mentioned to the members, I said, look, this could be the opportunity. And that's what I did. I went ahead, bought that Leaps call option, and sure enough, we get some action. It starts to move higher, and I'll tell you what, I'm absolutely loving it. The trade I tried to dial up did not take. The trade I just showed you, it did not take. So I was able to wait 1 or 2 days before I actually did anything. See that little bump right there? I was able to write a covered call later, picking up even more money. I'm going to show you how the trade ended. Okay? And as the stock starts to move, and as you can see, it's moving above any strike I would have picked. I would have picked the 69, the 70, or the 71 to have my shares taken away. Because I was able to wait a day or two, the stock had moved about $1 or $2 higher. So now I'm not picking the 69 strike. I'm picking the 71 strike. And we go ahead, we place that trade, and we're able to pick up money on the Leaps call option moving higher and the near-term covered call premium. Let's go back to my poor man's covered call tracker and take a look at how the numbers played out. Now, this is what I send to the members. So look, if you want to be a member, I give you a 1 free month offer. So head over to ctpdashboard.com to pick up your free poor man's covered call tracker. Okay? No catches, no ads, no spam. But if you're there and you're interested in what I do for my members, what I want you to do is sign up. I give you 1 free month. It's like 45 cents a day. If you want to take a peek over an active, successful trader's shoulder, this is a very inexpensive way. And I'll tell you what, most of my members will stick around for about 5 or 6 months. They absolutely love it. I try to give them content daily. I mean, I got so many spinning plates, but I always try to take care of my members. I want to show them the world through my eyes. But here's the thing that you get. You get to see every trade in and out regardless if I send out daily emails. And within those emails, there's content. And this is a perfect example. This is the poor man's covered call trade as it ended. Okay? I sent out the trade that I actually did the trade. So that puts skin in the game, right? On August 29th, I send out an email talking about the trade I'd like to do. That's pie in the sky, right? Well, then John turns around, he takes action, and I went ahead and I bought that Leaps call option. I then went ahead, tried to place the trade, could not because I didn't get my price. Then over the next 2 days, the stock moves higher, and I still write the 32-day near-term cover call. Absolutely love it, and I absolutely knew my shares would be taken away. This is how it played out. On August 29th, I bought one Leaps call option. It was the 40 strike. I paid $27.45. So my investment is $2,745, not $6,765. Okay, so you could already see you spend less money with the poor man's covered call. But what I did on September 2nd is I did write that covered call, and I did pick a 30-day trade, and I picked the 71 strike. You could see it right here. I was able to pick up $1.20. Now, the upfront covered call 30-day premium is less than my original trade. But remember I mentioned the 95-96 delta? That's very important here. The stock moves $1. This Leaps call option that I purchased will move 96% of a $1 move in the stock. So as Bristol Myers moves from 67.65 to 71, my Leaps call option I paid $27.45 for moved 96% of a $1 move. Now my Leaps call option, which is worth $27.45, moves higher. And when this trade ends, it's worth $32. This is how the trade did end. Today being expiration, and you can see right here, I let the members know exactly what I was going to do. Today being expiration, Bristol Myers is trading over 71. I bought back my near-term covered call option for a profit. I got paid $1.20 and the stock was just trading above 71. So because it's the day of expiration, there's no time value in the option. So I was able to buy that back for a profit. Think I picked up about 30 cents, and that's money in the wallet. But now we need to sell the Leaps call option if I want to realize the profit for this successful trade. And that's exactly what I did. As you can see, the trade ends when I sell it for $32. I end up picking up, listen to this, I end up picking up on my $2,745 investment, I pick up 17.65% cash on cash percentage gain on this trade. I end up picking up over $455 in Leaps call option profit. I pick up $30 in near-term covered call profit for a total of $485 in the wallet using the poor man's covered call, using almost just a third of the money I would have needed to buy 100 shares. Now remember, go to cptdashboard.com, click free spreadsheets, download your very own copy of the poor man's covered call spreadsheet tracker. You want to make sure you keep the numbers in front of you, and that is the best way to do it. I got one free month for you to join my membership. Would absolutely love to welcome you aboard. Next video, we're going to talk about how I use another great stock for yet another poor man's cover call trade for which we knock it down, generating more cash on cash percentage gain as if we own the shares. Be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.